Hey, good afternoon, guys. Okay, I'm going to begin today's session. So let me just set up the chat and the Q&A. Welcome, friends. Today's session is the live analysis session again. And this session is brought to you by Vantage and Zeta Labs. My name is Sherman. And today we're going to go through some of the live analysis on the Forex space. Once again, before I begin, I just want to make sure that you guys are aware that trading FX is a high-risk activity. Do ensure that whatever that we cover in today's session is in line with what you have your own trading objectives, and that you fully understand the risk before making any trading decisions. Okay. I'm going to skip across some key economic events today and then just go straight to the trading ideas. As usual, I'll go through the three main ones, the dollar index, euro dollar, as well as gold. And then if you guys have any pairs that you're interested in, we can go through them as well. And also, I think the last session, there's some feedback saying that can we take a look at equities as well. So we look at some of the indices. Mainly the SPY, which is the S&P 500, and then maybe the VTI as well, just to look at a total market, what's happening across the US market or across global markets. Okay. So I'm going to go ahead with DXY first. And for those of you who just joined this week, so usually we start off with the higher time frame, and based on what we're seeing since not even the start of the year, but even way back to say May last year, the dollar has been moving in this upward trend. And recently, since say November of 2021 to the start of this year, we have been on this upward trend channel. So we've been following closely on this trend channel. And in the last session, right, we talked about this breakout of this channel and into this new green zone. So usually what happens when this when price or the DXY breaks out of this trend channel is that it tends to move around in this new channel, it breaks out and then form a new direction for us. Okay, so a few fundamental events that actually affected this. So the key thing is that due to some of the new information that we're seeing in some of this consensus data, we are expecting a sooner than expected sort of like rate hike decrease from the Federal Reserve. There are certain central banks that are stepping in to prevent their currency from depreciating against the dollar. So one of them is the Bank of Japan. The other one is Bank of England, after the big sell-off at the start of this week for the pound. So there are a lot of events that a lot of these central banks are starting to panic, starting to see that this inflation condition in their economies are causing a lot of problem, and against a very aggressive Federal Reserve, the US Federal Reserve, their currencies are taking a big hit. So a lot of these central banks are stepping in to intervene and to make sure that their currencies do not depreciate against the dollar, because when your currency depreciates against the dollar, there'll be repercussions like trade imbalances, and most importantly, because the dollar is the reserve currency, it means that if you're not holding the dollar, if your main currency is anything other than a dollar, you'll be losing a lot of value in terms of economic value, as well as whatever money that you're putting in your reserves. Okay, so we're seeing this breakdown of this structure here, right? So this was our intended structure, and if it maintains in this structure, the dollar will remain bullish. But of course, this breakdown here and retest shows that it's on its way, on its leg down towards at least to 109.55. So if you take a map here, again, why this point? So it coincides with the lower bound of the previous channel, this gray channel, as well as this support here. So we can see a further weakening of the US dollar. There might be a few areas where we see a rebound, but I would say the most probable one right now is this continued movement towards the bottom of the channel. So if dollar is going to move down, so any other currencies like euro dollar, pound dollar, or even gold will appreciate against the US dollar. Okay, so let's take a look at the euro dollar. So we zoom out a little bit. Okay, this channel here has been in play for this whole channel here. If I go up to the daily, right, this channel is actually it goes way back to, say, in fact, this covers the channel as well. So you can see this being a very strong downward trend since November last year, right? Even all the way back to June last year. So prices respects this downward channel, and what I mean by that is that you can see that whenever it reaches the tip of this channel, it usually tests that channel and rebound from the edge of the channel. Okay, so if we look at what's happening right now, it nicely bounced off the bottom of the channel. And again, in a very bearish market, what it usually does, it tests once. It doesn't. If it doesn't continue back up to the top, it'll continue to bounce and bounce and bounce and keep forming lower lows. So we have to make sure that we need to find a reversal pattern at the lower bound of the channel before buying it. So here we can see that reversal pattern. So as prices falls to this point here, it moves up, comes back down here. This is still a bearish move, right? So what if it continues to be bearish, then we can expect a move like this. But this was the last high that caused this move down. So breaking past this past high means that buyers are entering this to defend this area, and we can see it in the previous move 2 days ago. So I think during the last session, this was the move that was made, right? So once this move has been made, then we're looking for a re-entry, a retest and a re-entry into this bullish move. So what we can actually do with this is one way is we can use the Fibonacci tool. Okay, so the Fibonacci tool here, where you measure the bottom to the top, and the most probable entry would be 78.6 here, 61.8, and the 50%. So these are all your discounted price where you can actually enter. Okay, so for me personally, I think the move down towards the 78.6 would be a good move up. So this entry has been missed. But again, if you look at the previous high here, right, this was sort of an indication that you got all the sellers here out of the market based on this push, right? There are no black candles here. So basically there was a cascading liquidation of the sellers here, and it nicely touched back on this 50% for moving up. So one of the questions that we see here is, due to the big picture of high inflation, the Federal Reserve is still committed to keep the dollar moving upwards. Do you think so? Yeah, so I think this is the position, this is the point in time where there are conversations saying that the Federal Reserve might pivot. If you look at the dollar index right now, definitely no doubt that as long as you're looking at a 7.18% increase in the growth rate of your inflation, the Federal Reserve will the expected. Okay, so I think let's go to this this website where we can look at what is the expected. So you go to cmegroup.com, the trading interest rates. So there's overnight rates there, and then there's an expectation of what those rates will be in the next FOMC meeting. So at the top here, when you load this this link, cmegroup.com trading interest rate countdown to FOMC. Okay, this is the expectation or the target rate probabilities for the next FOMC meeting. Okay, so right now we are at 325, right? We're at 325. Okay, so the next meeting is on 2nd of November. Right now, no one knows for sure because it's a 50-50. Whether is it going to be a 50%, 50 basis point hike, or a 75 basis point hike, right? Do remember in the previous FOMC meeting, we were going to expect 75 basis point hike for the 2nd of November, and then a 50 basis point hike for 14th of December, right? So now it's back to 50-50. So we are pretty unsure of what's going on because inflation is still high, but there's also the expectation that Federal Reserve will be less aggressive due to the fact that it's causing a lot of these repercussions in the market right now. And if you remember what happened during the COVID period, whatever that the Federal Reserve does, it's always lagging, at least by 6 months to a year. During the COVID period, they lowered interest rates, did all of this money supply increase activities in the market, and say that inflation is going to be transitory, which means there's going to be a short period of time where inflation will be high, but it will go back down to 2% in a short period, right? But that wasn't the case, and now inflation is at 8%, 9%. What's the worst that can happen, right? What's the worst? What can actually push the dollar even higher is that the next CPI data, which is coming out, say for this month of September, it prints a 10% or a double digit, and then the market will just go crazy, right? So I think there's a lot of uncertainties that no one knows for sure, right? But on a technical aspect, again, for 14th of December, expectation is that if we do a 50 basis point hike, then likelihood is that you'll end the year on a 4.5% which was even before the previous meeting, 4.5% was sort of like the expected value. But if you check on this every other week, you can see the probabilities change and sort of what to expect on during the next FOMC meeting. Okay, so technically DXY, right? This is our target right now. Are we expecting a big push to the upside? Based on this, nope. Right, it's already printing. So this high shows that this was my lower high, right? And then this low prints a lower low. So I would expect the pattern to continue, right? Basically, you're not gonna sell here. You're not gonna sell the dollar here. This will be my resistance. I'll wait, be patient, and see if the DXY come here, and then I'll scalp it down towards this point. What would be the reversal for an upward move? Is that this was the previous high. The price needs to move above, and then goes. So it's kind of simple. So this returned back to this point here, and then rejection of this point to continue that move down. Otherwise, you have to break your previous high, come back to retest, and then you start buying the dollar again. So yeah, it's very similar to the other currencies. So if you take a look at this, now we are forming this pattern here. So we broke the previous high here, come back to retest this level, which is the 50% discount here. So now we're on this leg up, right? Again, what would determine a bearish move? It's to form a new low, which I would say that this is my new low because it has already broken my previous high. So now it's very easy. As long as price breaks below this point here, I'll be looking to sell. But otherwise, there are a few upwards channel that has already been formed. So if you use these two areas here, so if we use these 2 points, here, we can derive this upward channel. And again, where would be my target? So your euro dollar is the inverse of it's roughly the inverse of your dollar index. This was the channel that has been respected for many months. So I would say there'll be some sort of movement up towards this point. And right now we already broken this resistance. This was previous support, broke down, and then this was my order block that I was trying to look for. But clearly price has already broken above it. For silver future, this might be the next resistance that hasn't been tested. This was the support, hasn't been tested, so price might try to visit this area. And if you're a bear, this might be your next chance. If let's say it breaks down. Otherwise, I would say it's gonna continue up like that. That will be the expected pattern. So again, if you look on if I want to clear everything on the daily, okay, this is the daily pattern. Okay, this is a very bullish. So as long as this candle closes white, right, this is a very bullish reversal pattern. Okay, so this momentum here is a strong downward momentum, but due to the fact that it has been going down, this momentum here is not as strong as this momentum here. So this is a very, very strong buy momentum. Okay, I repeat again because for many months we have been going on a downward movement. So this, even though it looks very strong, right? 4 daily black candles, right? This move down is not as strong as this move up. Because when is the last time you see such a move up, right? Right? Due to the fact that it has been a downtrend, this reversal pattern will be is a very strong reversal pattern. Okay, and again, due to the fact that we are at the it bounces off this long-term channel, also means that it is it's on its way to the next leg up. Again, if you want to make it a little more accurate, right? These 2 points were touched previously. So if you zoom in, based on the last 2 high points and the resistance that I've marked up earlier, right? This was my resistance. Again, we want to find areas of confluence, right? Say, for example, if I were to draw it this way, right? Again, why these 2 areas? This was the support, it broke down, it became a resistance right now. All the buyers that supported this area were out of the market. During this range, there was this this resistance here. So movements to the upside probably will fall into the first month of October before we look for prices to sell again. And at this point in time, we are looking to sell, right? We will be looking at this area. As long as price breaks below this area, then it has to break cleanly below this area and then retest and then come back down. There's an order block here. There might be another area for support, and then before it moves up again. Okay. Hope that's clear. Let's look at gold. In gold, we drew this to green area. So the bigger green downward channel was a long-term down channel, right? And I think this point here was the support since the start of the COVID cycle. So now where we are, so after it broke down this long-term support, there was this a more aggressive downward channel created here, right? And then we sort of a range for a period of time. This was the range. It broke down, and then due to the fact that the dollar index weakened last 2 days ago, now we're seeing this. It broke past this resistance, retest on the previous high, and now we're on the way up to this level here. Okay, so I think this red zone is still a very strong resistance, so we're not going to fight that, right? If you want to look for a buy, a confirmation of strong buy, breaking above this would be a very strong buy. So this entry here would be a very strong buy. But other than that, if you were to follow this downward channel, then we are at a crossroads of this point where you're looking for a reversal pattern. So he has to induce a low, break below the low, retest this channel, and then we sell from this, and then it goes down again. This is for myself, but otherwise, if bulls are strong, right? Going back to this area again, we have to look at what's happening here. He has to have a clean break above to start the buy again. Otherwise, this would be the move up and then induce a higher low and then down again. And again, all of this, why am I biased against gold? Why am I favoring dollar more? It's due to the fact that the dollar, it's affected by the Federal Reserve, and we are seeing more and more of this intervention by all these central banks out of their scheduled announcements. So for all of these central banks, right, they are scheduled to increase interest rates. They have the votes in place on certain dates of the month or certain dates of the quarter to actually come together, vote for a interest rate hike or an interest rate decrease or keep it the same, right? But you're seeing occurrences of central banks coming in to say, due to the fact that like we need to defend our currency, we can come in and we can change, we can move the dates earlier, or can shift those announcements earlier to affect those changes, due to the fact that your dollar can be affected the same way. I'm a little bit more biased towards the downside for anything that's dollar related. The key thing would be CPI, right? CPI expected values 7%, and then following that for October probably 5 to 6%, and then you see that we'll acknowledge that the federal rate increase is effective, but the black swan will be to print a 10%, a double-digit CPI in the next announcement, and then you will have chaos in the markets, right? So we need to protect against that. Otherwise, scalping the buys for dollars is perfectly fine. Now there's this strong movement. Even if I go down, if I go up to the daily, same idea as your euro dollar, right? Because of this downward trend, right? This is a strong downward move, right? Due to this whole downward trend, but because of this move up here, this counter trend reversal is a strong counter trend reversal. Four candles, one long wick here shows that there's very strong bias towards the upside. Okay. Yeah, and you can see a lot of a few examples where you have such a pattern, and prices move. Same thing for this as well. So you have a lot of these black candles. This 3 candles is a very strong reversal pattern. Same thing, all these white candles. This is a strong bullish move, but general trend has been moving up. So this black candle is a very strong reversal candle. Yeah. So same thing. If it breaks above this range here, then we can see for the upside for gold. Again, this was where we were struggling after the breakdown of the channel. This area here, right? This whole area here, we were struggling for a week after the breakdown of that long-term support. So no matter what, if you break above this level, it's going to be a very strong push to the upside. Okay, yeah. We'll go through one last chart on the equities, and then if you guys have any other charts that you want to look at, we can take a look at that. We do have some more time this week, so I usually look at SPY, the S&P 500. Okay, the last time around, just to reiterate what we have discussed previously. Okay, so strong downward trend. If you were to draw this, this was the previous high to break for an upward move. So it has broken, and now it's back to retest this. Some people might say this is a double bottom. Okay, so for a double bottom confirmation, to trade a double bottom confirmation, the usual pattern is that you need to break above the neckline, retest it. So that's back to 430 level, which is quite a distance away. So because of the uncertainty, you can see that prices are ranging around here. So as long as it range around here, this is a sort of a bearish outlook on equities, and more likely than not, 2 things, right? If it form equal high, equal lows, then breaking above or breaking below would be the indication of the direction, right? Otherwise, if it forms something like this, if it forms this sort of pattern, this is basically the triangle pattern. Basically, buyers wants to defend this area. Every time it comes in, yeah, this area is considered a discounted price, but the sellers are very quick in entering the market. What happens is that once it breaks past this support, then all the buyers are out of the market, and then you will have this sell. So if you see a pattern like this, then it's going to be a bearish pattern. Otherwise, for a bullish pattern here, what we want to see is something like this. So this, right? This was almost like that bearish pattern, right? So if it goes down, then you see a breakdown of this structure. But so the pattern that we're looking for is something like that, and then break above this level, retest, and then we move up again. And once it breaks past this, then your double bottom formation has been completed, the retest of this level, and then it moves up again. So for this to happen, inflation has to fall, the wall has to end, and then maybe a lot more QE and a lot more printing of money into the markets, and then you see this move up. Okay, I think that's about it. I think there wasn't anything interesting, and so okay, GJ is pretty interesting. So pound has recovered way above its so the intervention by the Bank of England, right, caused this massive rebound. So it has only been a span of 1 week. So if I would show you what happened last week. Okay, so this was the area where we were. This was last Friday, right? It broke down. It broke down to this level, and then Monday just sold off. So this was the new range that we were looking at, and this range didn't even last long, right? Last for about 4 days, and then now it's broken above, and we are almost back to where we were last Friday. So there was a lot of interventions by the Bank of England first, and the government as well. So first of all, they wanted to do tax cuts in the midst of this whole inflation fiasco, and then the bonds, people were selling all of these government bonds, and the Bank of England had to step in to buy back those bonds, right, to keep the prices from falling any further. And then so all this intervention is basically trying to reassure the traders or reassure the markets that, you know, like they are willing to step in to ensure the pound strength. It was very close to 1:1 to the dollar, but of course now it's back up to 1.12. But these are all temporary measures, right? So I wouldn't be surprised that you know, like all of these measures are insufficient, and then we move to another leg down, and again a lot of liquidity created from this push up, and then who knows, maybe it comes back down. But if they were to make this price this dump again, then basically it will affect the DXY, right? And then you'll see a reversal coming in soon. Yeah. So again, this look here, just the last 1 hour, right? The formation of this area here is a very we do welcome this sort of pattern as a bear, because you induce a new low here. These are where the new buyers came in, right? So buyers came in, sellers took some, buyers took some profit, sellers haven't entered the market yet, right? So this new low here shows that new buyers are coming in, and all we need to do for sellers is to break past this level, right? To get the buyers out of the market. There's a lot of liquidity here. Looking below will allow us to get sell into this market again. Okay. So I think today it's a Friday. things are a little bit tricky on a Friday. So let's see what's going to happen, and then to have a clearer picture for the trade next week. Yep, that's all I have for today. Thank you guys for coming, and I will see you guys again next Tuesday. Okay. All right, thank you.